can treasurers expect in 2024? Welcome to CurrencyCast. My name is Agustin Mackinlay. I'm the Senior Financial Writer at Cantox and your host. In this episode, we have the pleasure to welcome François Masquelier, CEO of SimplyTreasury and chair of both the EACT, the European Association of Corporate Treasurers, and of ATEL, the Luxembourg Association of Corporate Treasurers. Mr. Masquelier is one of the leading minds in Europe when it comes to treasury management. François, a very warm welcome to you, and thank you for joining us today on CurrencyCast.
Thank you for welcoming me and for the invitation.
All right, François, let's start with perspectives for 2024. If I remember what we said about a year ago for 2023, we said that technology would help treasurers in a landscape of wild economic uncertainty, shifting interest rate differentials between currencies, and high foreign exchange volatility. Now, it appears that the landscape has changed a little bit. There is maybe less foreign exchange volatility, and there is even some talk that interest rates would at least stop from going up. So beyond any forecasts, you know that at Cantox we don't give much importance to interest rates and foreign exchange forecasts. What is your outlook, broadly speaking, for 2024? Do you think we can expect big changes from 2023, or what are your surveys telling you? What are the ATEL surveys or the EACT surveys or the PW surveys telling you?
Yeah, no problem. So as you said, so the last, let's say, recent survey was the spring survey of EACT. It's an annual survey. We will launch it very soon in January. And of course, when you think about it, the last survey was released at the time, slightly after the bank crashes in the US and with the Swiss banks, and also at the moment where interest rates were slightly picking up. So it's two important elements I will talk about. So of course, the current context could maybe change and shift some of the priorities. Only I would say that I do not expect that 24 will be very different from 23. It's like the races that we will have the same at the end, but maybe the ranking could be slightly shifted because of this let's say new context and high interest rate and counterparty risk. It's not a new risk, but a risk that is more important, and of course focuses could change. And you rightly mentioned volatility. FX volatility is coming down, but it's not a reason for thinking that it's not a risk to be well treated, because you know that it can pick up very soon. So I guess that I do not expect to have major changes, and I don't know if you want me to comment some of this risk and let's say priorities. I'm ready to comment.
Well, yes, you said that foreign exchange volatility coming down. That is, of course, that sets the stage for a complacency, perhaps, and or recency biases coming in. So it could be potentially a little bit dangerous. But I think let us shift to another part of the say the landscape that is becoming more prominent as we go along, namely the issue of treasury centralization, or the centralization of treasury operations. Now, of course, it was on the cards last year, but it would seem that every day that passes by, there is a new piece of information, or a new blog post, or a new article, or somebody at a conference. So putting even more emphasis on the importance of centralizing treasury operations. Now, this year at Cantox, we will have a big announcement or big launch in terms of foreign exchange risk management centralization. But beyond that, François, what is your view? What is the idea behind this renewed emphasis on centralizing treasury operations?
But As we say, though, when you look at the different priorities, some are, let's say, identifying some risks that could be better managed and mitigated if centralized. Because for me, the two major lessons we all learned from this, let's say, green swan crisis, COVID, and after the, let's say, the recent bank crisis and the pickup of interest rate, that things could go very fast. It's important to be first centralized as much as possible and then automate it, or even going up to the next stage, the hyper automation. Why is it important? Because if you centralize, of course, you will offset some of the risk. You will have some expertise at the central level, and you can better manage by using maybe more adequate tools. So before you disclose what you announce, I keep thinking that any solution for better centralizing treasury is quite important. And we have noticed that a lot of companies try to centralize more and more, not globally because it's always difficult because of the different time slot, but at least to have what we call the RTC, the regional treasury centers. And it's a notion that is really emerging. So a lot of companies try to be more efficient, to better centralize, to make sure that they capture all the entities they control, at least a fully consolidated entity. So
Right.
it's quite important. And this automation and centralization are combined and really aligned, because if you want to centralize, you need some tools to be more efficient, and you need to automate to free some time to make sure that you apply properly the policies, the strategies. You free some time not to produce report, but also to have time to analyze the report and to take more strategic decisions. So we are looking for more, let's say, a decision-making solution where you can go a step further. We do want to remain, let's say, a figure producer or report producer, but also to analyze and to bring more value to the C-level. That's why we see a sort of, as you already say, emergence of this centralization and to try to centralize what is not yet centralized. Sometimes for historical reason, for let's say legal reason, and we also notice that a lot of companies, when they acquire, have a tendency to be very slow to integrate new businesses, new divisions. So it's important these days we rely that to centralize and to integrate the new businesses into your business, despite the fragmentation of businesses, because the multinational companies not have only one single operational business or underlying business. They have many businesses and with different patterns, different, let's say, specificities. So it's important to centralize and also to have the expertise. I mean, the resources, the human brain. So it's good to have the tools, but you need also to have a skilled team. And these days it's really difficult to find the skill and the talent, and to retain the talent, and to have a team dedicated to the treasury issues, working for the affiliates.
Absolutely. Now, yes. Thank you for that. Now, you mentioned, of course, the solutions, the technology solution in the context of centralization. And when it comes to foreign exchange risk management centralization, we see that some of the existing solutions, they don't really address two, as after listening to you, maybe three important pain points, namely, so for example, the optimization of netting opportunities and forward points management, both at subsidiary levels and headquarters levels with a single software solution. But also the issue of cost, right? If all external trades, that is FX derivatives transactions, are executed by one entity, in this case, we have in mind headquarters, it would help the firm negotiate better terms with banks. And as you, of course, imply and even say very explicitly, the problem of building expertise at group level. What is your view on that point? So foreign exchange risk management, centralization in particular.
Yeah. So if we focus more on the FX risk, one of the many risks we are to the master or the let's say the garden of, I would say that yes, indeed, netting is quite important, because it's important to offset and to see as much as you can, and it's not always possible because of the one-to-one approach. And of course, automation system enable the one-to-one approach, because ideally the one-to-one approach is the best. When you say netting, it's always great to claim that there is a natural edge. In theory, it works. In practice, it's more complex than that. So it's really difficult to find things that could be fully offset at the same moment with the same, let's say,
same value date, same
etc. So at the end of the day, it's why a lot of corporates, especially when they are well equipped in terms of system, preferred, and also for the edge accounting reason, IAS 39 and IFRS 9, prefer to go for the one-to-one and say, okay, I prefer to increase the volume by not netting because it's complicated, but it is my edge accounting, let's say, evidence documentation. So it helps me with my auditors to achieve my objective. And furthermore, I don't care about having a bigger volume of transaction because I have system and I centralize everything in one pot, where I could have access, by the way, via platform to the market and try to get the best execution. But we all know that the best execution is just part of the game, because the pre-trade part is quite important to get access to the information, and their automation is key. Because a lot of the pain point today is the fact that we have too long between identification of risk and communication of risk before execution. And then we have the post-trade phase. You also mentioned the forward points, and it's quite important in a let's say environment where we have a high interest rate, we have some exotic currency, sometimes difficult or even impossible to hedge. It's quite important that you diversify, and via platform you can have access to all these currencies and try to manage these forward points. So do we need to always hedge 100%? Maybe not, but at least to have a dynamic hedging approach where you can monitor your risk and the time could play in your favor, especially if you have swap points playing against you. You also mentioned cost, Agustin. It's quite important because cost is also a big issue. Cost of hedging are increasing year on year for different reasons, because of the counterparty risk, because of all the regulatory and capital adequacy constraints on the bank level, because some banks are not able to hedge all currencies. It's why we have emerging solutions like StoneX or Avery Transfermate proposing to hedge this kind of exotic currencies. And by the way, for the business, it's good news, because Treasury could create value for the business by opening doors to this exotic or more exotic currency that sometimes the CFO didn't want to onboard. Now you can open to market where you can onboard this currency because of your central expertise, manage this currency properly, and make sure that it's hedged properly. And if it's not hedged, monitor them in a way that in case of big shift, you can ask the machine to execute the hedging. And in case you can stay within a certain acceptable range, benefit from time passing and reducing the importance of the swap point. And maybe the last point you have not mentioned, but that is quite important in my view, is the regulation. We should keep in mind regulation. Accounting on one side, it's important to have the ad hoc reporting these days. It's key for not being qualified. And the financial regulation, and maybe you know that at the moment EU is reviewing EMIR, and we can expect that under the Spanish presidency or maybe the Belgian one, by the end of the existing or the current commission, EMIR could be sorted out, and there are some risk of reincorporating new additional reporting. So for all of this element, I think that it justified even more being automated and centralized.
Absolutely, yes. I think we would agree on this one. Now, of course, when we say foreign exchange risk management centralization, there are different possibilities, right? At one end, we could have complete decentralization. So, for example, the subsidiaries both set their own FX risk management policy and execute what we call external transactions, that is, FX derivative transactions. And on the other side, the full centralization where headquarters not only decides on the FX risk management policy at all levels, at subsidiary levels, at group levels, but also is the only entity that executes actual FX derivative transactions or external trades. But in between, there could be some possibilities of, say, partial centralization. How do you see this playing out?
No, I totally agree. So on one side, you have the best practices and the theory. On the other side, you have the practice, and sometimes it could be complicated for many reasons. So I like the idea of a mixed solution where you can have centralized and decentralized operation. Of course, at the end of the day, it's better to centralize everything for the execution at one level to avoid having different approach. It's important to have one policy for the FX, even if you can, let's say, divide policies in different strategies according to the businesses, the underlying businesses, the different division. In multinational companies, per definition, you have divisions, you have different businesses. Although we try to concentrate on our core businesses, and you know that some businesses, let's take the luxury industry, the car industry, we can have different patterns depending on the underlying products. For example, luxury, you have fashion, the expensive fashion, where you have a quarterly release of new dresses, etc. You can have the perfume where we have a longer pattern, etc. You can have also the jewelry, etc., with different elements. So it's a mix of that, including the commodity risk for some people. So at the end of the day, it's difficult to say that you have one, let's say, best fit for all model. It could be a mix, and it's why the machine could help making sure that if you are partly centralized and decentralized operation, at the end of the day, you can capture all the deal and make sure that the policies are respected and you are aligned. Because the big risk is to have one division applying a different strategy than another or different policies. It's quite important to be in line, and it's something that a lot of auditors, external auditors, are checking at the moment. And last point, don't forget that a lot of companies now seems to be refocused on the core businesses, and they have different divisions. And we saw, especially in the pharmaceutical sector, that you at Cantox know quite well. You have a lot of, let's take the healthcare, a lot of healthcare, let's say, division of pharmaceutical group try to be, let's say, a spin-off or could be separated from the business, or they try to have a certain autonomy, because it's possible that in the future you want to IPO a division or separate the division. It's a case of some big company, Johnson & Johnson, Sanofi, Novartis, etc. They try to refocus. So if you want to reorganize, sometimes it's good to have a certain decentralization. It's not incompatible, providing you have one tool and you can capture everything in one single, let's say, solution, just to make sure that at the end you are aligned in terms of respect of policies and strategies while being efficient. And again, I don't claim that centralization is the only way to do. Sometimes it could be, as you rightly say, a mix and a combination of solutions depending on the different situations.
Yeah, that's right. As you said, look, you could have the optimal, say, centralization. So, for example, allowing the business to specialize on their operations, but at the same time, taking away from them the burden of executing the FX derivatives transactions, letting them, of course, carry out the internal FX trades with headquarters. That appears to be a really interesting combination, because it gives them the ability to concentrate further on their business, but at the same time, it takes away the risk of having derivative transactions being handled by subsidiaries. So absolutely spot on there, François. Let's go to the, well, not totally unrelated, of course, topic of about one of your recent articles, and you say that the king is back, right? And you're mentioning, of course, the importance that is not going away anytime soon, of course, of cash and liquidity management. And there seems to be people discussing cash is king. Some say cash is queen, in tribute to the late monarch of the UK. And we have a guest saying cash is the emperor. And if we continue like that, it's going to be the monarch or the despot. Why not the tyrant, right? But hey, explain to us a little bit again why for 2024 you see again cash, or let's say as the king here in terms of treasury operations.
No, but it's obvious. It has always been said that it's a sort of common say that cash is king or queen or whatever. Qualify it as you want, as you wish, but it's still the idea is to make it quite important. And it's clear that because of the recent COVID crisis, financial supply chain disruption, you remember the Suez Channel story, because of the Chinese being closed for a while, because of the picking up of interest rate, and more recently in spring 23, we had this banking issues in the US with First Republic, with SVB, Silicon Valley Bank, and some others in trouble, as well as the Swiss bank. We found the solution, but still it was quite stressing. So liquidity is extremely important. When you are cash rich, just to make sure that you have a good management, diversification of your counterparty risk, and again, centralization and alignment to policy, it's quite important for corporate treasurers to sleep well at night. But on the other side, don't forget that it's quite important for the cash poor companies to ensure the liquidity via buffer, via committed credit facilities, via a recourse to the capital market, or to different source of funding, and diversification is quite important. And what I fear, and coming back to my view on the risk for 2024, one of the risks I perceive, it's a difficulty of, let's say, refinancing. A lot of companies in 24-25 will have renewal of existing credit facility that they are negotiated 3, 4, 5 years ago, quasi at zero, or negative rate but floor at zero. So when you pay zero plus a margin of, let's say, 100 basis points, it means that if we are now at 4% plus the same 100 basis points, assuming that the spread remains the same, it means that you have multiplied by 3, 4, or 5 the cost of funding. So the service of the debt will be a big issue to have access. And in the meantime, we saw that a lot of companies have continued to increase their, let's say, gearing. It's something that you can read in paper in the US, but also in Europe. So only in the gearing of companies, the indebtedness level has increased over time. It was also a consequence of the crisis, by the way. Some were obliged to get access to the market.
Right, and François, as you say in your piece, right, it's also this view that I think you think is misguided, the idea of increasing debt ratios in order to lower the weighted average cost of capital, as the cost of debt is lower than the cost of equity. But you do criticize a little bit that approach, is that right?
Yeah, because again, I'm really a big defender of the, let's say, classic economic principle. And maximizing your WACC, it's a good idea. And of course, you try to play on the leverage and to maximize your leverage. But at the end of the day, it could be risky, because we saw that in the recent crisis, not only the recent COVID crisis, but all the crises we face over the last, let's say, 15 years, that things can be extremely fast. So it's important to be able to react. And if you optimize, or let's say not optimize, but maximize your WACC, you could be at risk when the situation will be really rapidly deteriorating. And the speed and the, let's say, the size of changes or the shift could be quite difficult. So I would certainly not recommend to maximize, but I prefer the word optimize, and try not to go to the last limit, the last digit, but try to take some buffer. And we saw recently some corporates having in their policies to maintain a cash buffer extremely liquid. I know some corporates, large ones, having policies where they say, okay, all the excess cash should be placed with a daily liquidity. Could you imagine? So it creates some trauma, this crisis. So it's quite important to to also consider that access to liquidity can be difficult. So, but it's not when the crisis is there that you should think about diversification of your source of funding. And always try to remind people, and it was a key priority in the last survey, number 2, if I'm correct, and it will be still high in the 24, I guess, and I believe, is the fact that working capital is the first source of funding of a company. So work on your working capital, try to optimize, work on your cash flow forecasting. If you have better, let's say, provision of future cash flows, you can better size your credit facilities. Always take reserves and let's say, buy insurances with committed credit facilities. And last but not least, we've recently heard from Christine Lagarde in front of ECB, a recent speech that CMU, Capital Market Union, is quite important. In Europe, we are more dependent on the bank borrowing compared to the States, and we should have a better balance between capital market and bank borrowing. And it's something that we should keep in mind if we want to survive. So yes, king is back, and cash is king. That's
all right. So let's link now the two issues of foreign exchange risk management and cash and liquidity management, and even, of course, working capital management. And let me phrase it like this: see what you have to say on this. We at Cantos always say that by embracing currencies without currency risk, so companies could sell in the currencies of their customers and thereby lowering the risk in their accounts receivable, and at the same time they can confidently contract or buy in the currency of their suppliers, which presumably could allow them to get extended paying terms. So we have the working capital management here present also when it comes to foreign exchange risk management. And we can give more examples. So for example, automated swap execution or delaying hedge execution when you have unfavorable forward points, so that you, of course, diminish the need to set aside cash in terms of collateral requirements. So these issues are linked. There are no silos. What is your view here, François, with a view on 22?
FX cash management, it's a big portion because we are all international, multinational companies, small or big sizes, whatever, but it's important because in working capital we have a lot of FX issue. We have also the cash flow forecasting that is quite important because we need to try to anticipate the revenue in different currencies. By the way, one of the first things I recommend to our members is also to consider the functional currency. Sometimes by changing your functional currency, you can reduce your risk. And if you are an air freight company, maybe it's more logical to be exposed to US dollar to be functional currencies, despite the fact that maybe you can be located in EU. So that's the first step. The second step, as you rightly mentioned, in a difficult economical environment in some businesses, you need to find new markets and new customers. Diversifying the market and going, let's say, abroad, and maybe, let's say, attacking some markets that were a bit emergent and not really a key for the CFO could be quite interesting. And by doing this kind of centralization, automation, by the monitoring of the swap point, because of the potential, let's say, huge delta or let's say, swap points for some currencies, you can certainly enter in markets where you were not able to go. So it's quite important these days to also diversify your market. And it's also important to invoice in the currency of your supplier or the currency of your customer, because then you can master and manage yourself your risk rather than to leave it and push it to your customer. Because some people, let's say, are a bit candid. They think that asking for your supplier, if you are a media company, you buy film rights from a US major. If you ask, you can certainly get invoiced, let's say, stated in euro. But at the end of the day, if you push the risk to your supplier, guess that your supplier will try to insert clauses to index or
markups, of course,
markup buffers, etc. And so at the end of the day, it's not a good. It seems to be a good idea. It's not at the end of the day. So it's why having the local currencies, suppliers or customers, it's always better because you can master your risk and decrease your and potentially have a competitive advantage vis-a-vis your competitors.
Absolutely, yes. François, let's discuss a little bit the topic of treasury technology. Now, you frequently update. Let me read it correctly. The treasury landscape. No, the treasury technology landscape by SimplyTreasury. Now, we find it a really interesting resource, of course, for treasurers to find their place in the complex and shifting world of treasury technology. And we must say that we are very pleased to see currency management automation alongside ERP and TMS. Discuss a little bit this technology map.
No, but just to give you a bit of background and history of this map, I started about 2 years ago because I realized that first, technology in treasury, not only in treasury, in finance in general, but in treasury in particular, it's quite, let's say, a jungle of solutions. It's difficult for corporate treasurers if you don't go outside, meet people to find your way. So I found that it was necessary to help our members to have a better view. Then what is quite unique in this mapping or landscaping, I would say, is the fact that I decided to have categories. A lot of people consider everything is TMS, but at the end of the day, yes, TMSs are supposed to do everything. They should do everything, but we know that they are not able to do everything. And so it's why I decided to separate, and I will explain what I plan to do for the next stage. But the idea was to say, okay, we have TMSs, we have ERP, and we have different solutions, including CMA, but you have also the bank single gateway for the bank connectivity. And the sum of the different elements that could be provided by some, let's say, large usual suspects, the big players on the market, could also be, let's say, individualized. So the idea was to put a name in the major category the player are acting on. For example, SAP, Hyan, or Kyriba in TMS, SAP in ERP, or TIS in Bank Single Gateway, for example. And so I've tried to put categories that quite new in my view, to define the different categories and to put name on it. And it's an evolving document because, of course, every week I receive, I don't put, let's say, update on a regular basis just because I want to update. It's just because I receive demand from people or identify new systems that are, let's say, worth to be included in the map. You have also changes in logos, changes in name, acquisition, mergers, etc. So it's a living document. And the next stage will be it already exists. We have a second map where I try to, let's say, just focus on the TMS providers and see what are the different categories they are really proposing a solution for. And we know that sometimes they could cover different categories. So I just empty the map and just focus on the 20-25 major players, and I will keep evolving. And I'm also working on a third map where I will focus more on SMEs, family offices, and alternative funds, because it's different categories of player having different needs. So it's a different one. But the idea will be to have a map where people, and then it will be transformed into a website, could go see, okay, I'm interested in that solution to, for example, for bank fees analysis, or for bank guarantee. I would like to go into the category, to focus on the category, to see what are the major players, and to have a sort of marketplace where I can find information and find some of let's say, technical sheets where I could get some information. And then in the next stage, it will be a tool for, let's say, preparing RFPs for corporates to say, okay, what are the different, let's say, providers I could use for populating my RFP when I want to update or to change my treasury technology.
All right, it's really useful. We look forward every time to your updates on the treasury technology map. And again, we're really glad to feature there with currency management automation. Let's get a little bit slightly more polemic in terms of treasury technology. You know that in the end, in treasury technology, it always goes from discovery, then to hype, then to adoption, and finally scaling up, right? we have the feeling at Cantox that application programming interfaces, perhaps as opposed to more hyped technologies such as artificial intelligence, we are there with APIs already well into the phase of scaling up, right? It's well beyond hype, well beyond adoption. It is really going very, very fast. And the latest examples allow us to put it almost all together. So, for example, writing in ATEL, a commentator just said that if you want end of the day reconciliation processes using Swift MT940, now you can just use an API to provide real-time data, right? And that would allow you to make better liquidity management decisions, which I found really incredibly important, because of course that may allow treasurers to want to use less of liquidity buffers just by having this technology API connectivity, allowing them to pull the necessary information at the right time, right? And if you couple that with what we just said about currency management, where APIs also play a very, very important role. So it seems we're coming full circle, and that application programming interfaces are fully in scaling up mode. And we can even talk about apiculture, right? Or like beekeeping, but this culture of APIs is an important part in terms of treasury tech. What is your view here?
No, I totally agree, because we were talking about technologies and let's say fintech or tech companies. Now we are talking about APIs and these interfaces. And it's true to say that I understand the concept of API culture is quite important, because it's something that is like for honey is quite important and quite let's say rich of information. So the idea is how we can, let's say, better let's say serve the corporates. And a lot of banks, BNP or large let's say international global banks, try to have first access to the technology, but also use API. And what I always recommend to our members for working with these banks more open to co-create is to try to identify the problem and to see, because the problem is always with the objective of being more in real time, to accelerate the process of decision, to get better access to the information more immediately, to react faster, because we know that time is really an issue these days. And when you see some large bank, they try to develop co-creation with their customer, to try to build an API, to try to sort out a problem, to find the information where it lies, and to improve the system. And this solution then could be, let's say, industrialized and duplicate to other customers. So I think it's certainly a recommendation for our member across Europe. Do not hesitate to talk to your bank, to explain a pain point, and to try to see if with API, if information lurks somewhere, you can extract the information, make some use of it, and get access to the real time, because real time is really the motto for the coming years. We need to have a faster access to the information and a more accurate information, of course. So innovation is quite key in that aspect, I would say.
Right. All right. Look, François Masquelier, CEO of SimplyTreasury and chair of both ATEL and EACT. I think we've come full circle. We started with the outlook for 2024. We then went to the subject of treasury centralization with lots of topics there to discuss. We went back to the recurrent issue of cash is king. And we are now ending up this conversation by discussing application programming interfaces, all with an eye on this year, on 2024. Let's see how it goes. I'd really like to thank you for this presentation, François, with these questions and answers. It's been really a pleasure, and we'll do, I'm sure, another interview sometime this year, or at least to be sure to prepare also for 2025. So many thanks, and well, we'll see you next time.
Thank you.